Hi everyone, it's Reeve here. Today, I want to share something that most Singaporeans only remember at the very last minute every year. That is the SRS account. Now, before you scroll away, hear me out. This is one of those rare tools in Singapore that lets you save taxes and build long-term wealth at the same time. But here's the truth. 8 out of 10 I met either don't have an SRS account or they have one, but they do not know how to use it properly. So in this video, I'll break it down in simple terms, how much tax you can actually save, what's the smartest way to invest your SRS account, and the biggest mistake people make before December comes around. So by the end of this, you know exactly what to do and how to make your money work smarter before the year end. So let me share this PPT with you guys. So supplementary retirement scheme, the things you need to understand before opening an SRS account. So what is an SRS account? So SRS account is part of the government's multi-pronged strategy to address the retirement needs of Singapore, or rather Singaporeans. While CPF contributions are compulsory, contributions to our SRS accounts are voluntary. Contributions to SRS account can be used for investing. They can subsequently be withdrawn to provide an additional source of income once member reach our statutory retirement age of 62. I indicated 62 because there are people that their age statutory retirement age could be 62, 63. Going forward, it'll be 64, so and so forth. So unlike funds in our CPF account that generate risk-free interest of between 2.5 to 5%, contributions made to a SRS account only generate a nominal interest of 0.05% per annum. So this is similar to the base interest rate of most bank accounts or bank savings accounts in Singapore. However, the major advantage SRS offers lies in its tax benefit. Volunteering contribution made to your SRS account are eligible for a dollar-for-dollar tax relief. The annual SRS contribution cap is currently at 15,003 for Singapore citizens, and for permanent residents, 35,700 for foreigners. So there's a difference between Singaporean PR together and also for foreigners is 35,700. So before you consider whether or not an SRS account is suitable for you, here are the important things that you should first determine. Now, number one, how much tax savings will you be enjoying? The main reason for opening an SRS account is to enjoy tax savings while saving for retirement. This means you should determine how much income tax you are actually paying each year before you can calculate how much tax savings you can enjoy should you start contributing to your SRS account. I think this is rather important because let's say if you're earning like 20,000 or so, it makes absolutely no sense for you to put in 50,300. Then how much money will you be left with to spend? That is something that I think is not not rational. So later on, there'll be a table to show you. Now here's a rough estimate on income tax you can expect to pay based on your annual income before and after SRS contribution. So let's say if you're looking at the first 20,000, the first row, typical income tax is actually zero. So you contribute absolutely it doesn't make sense because it's zero. And let's say you're talking about the range of let's say 80,000 income, you're supposed to pay 3350. But after contributing, you're actually paying 1071 instead. Sorry, you're actually paying 2279 instead. So you make a savings of 1071. If you are earning like 200,000, income tax could be 21,150. But because you contributed SRS account, you only need to pay 18,396, which is a good savings of 2754. If you divide by 12, you're estimating saving around $200 a month. So usually for me, when I talk to my friends also, I would suggest that they should be earning income at least 80,000 and above before it makes sense for them to contribute to SRS account. Ultimately, it also depends on individual because if you are, if you're not a big spender or you have a lot of expenses, sometimes contributing to SRS account could indirectly prepare for retirement funds. So, high income individual saves more. So let's say, as I mentioned, if you earn 200,000 and save up to 2754, that's a lot of money. In contrast, if you earn like 40,000, you only save 456, then that absolutely makes no sense. So this is because Singapore adopts a progressive income tax system where those with higher income are taxed at a higher rate, which is pretty normal. Hence, reducing the accessible income translate into greater savings. So actually, you can use ChatGPT or Google to find out whether is it a good solution for you to contribute to SRS account. So number two, how you intend to invest after for contribution. So as mentioned above, unused contribution in your SRS account, you only earn interest of 0.05% per annum. This means that you should aim to invest your SRS contribution if you want to make a better return. Otherwise, I think your money will get smaller and smaller over time due to inflation. So yeah, also advised to invest in a wide range of financial instruments depending on your own personal preference. There could be let's say stocks, bonds, fixed deposits, unit trusts, annuity plans, so on and so forth. So it's entirely up to you. However, I really strongly encourage people don't leave the money there and then you don't touch it. Because at the end of the day, if let's say you're able to buy a cup of coffee many years down the road, you might not even be able to buy. Doesn't make sense for you to buy half a cup of coffee, right? So by investing your SRS funds, you will not only enjoy immediate tax savings, but also give yourself the chance to earn a higher return over time. As with all investments, there's always the possibility losses could be sustained. Hence, it's important to determine the type of investments you are comfortable making before you start investing with SRS funds. So as mentioned, there are different tools available, and individuals' investment preference is very subjective. So find one that you can tolerate the risk level, depending on what kind of character you are. So number three, gains on investments are actually tax-free, and if you were to withdraw in the future, will be taxed. So any gains that you make on SRS account will automatically go into SRS account. These gains are exempted from any income tax until you decide to withdraw the money. So let's say in Singapore, let's say you invest 10,000, and let's say at the end of the year becomes 11,000, you'll not be taxed unless coming to pointer two, when you reach the statutory retirement age, let's say at 62, you enjoy a 50% tax concession for any amount withdrawn for SRS account. So example given at pointer 3 is that let's say you withdraw 40,000 per annum, only 20,000, which is 50%, will be considered as tax income. If an individual has no other source of taxable income at the age, then he will not be, do not need to pay an income tax since his first 20,000 is tax-free. So this has been ongoing for quite many years, and I think it's a very good thing because only 50% will be taxable. Also, okay, so for withdrawal wise, right, for SRS members, they have a 10-year period to make withdrawals from their SRS account. So let's say if your statutory retirement age at about 62, based on 62, then you take from 62, withdraw all the way to 72. If yours is 63, then all the way be till 73. So any amount remaining in SRS after 10 years will be automatically considered as a lump sum withdrawal, with 50% of the amount subject to income tax. So this is something that you have to take note. At the end of the day, it can be done easily, based on your age, and also at the same time, are you earning income? Most of the time, if you are 60 something, probably you're already retired or semi-retired. So the earning capacity might not be as high as last time. Yeah, so this is as example, let's say 50% of your future withdrawal, and your retirement will be taxed. So if you look down here, let's say based on year 5, if you withdraw 40,000, only 20,000 will be taxed, which is 0. So just make sure that you don't earn any income other than your SRS funds. Yeah, so maybe you consider doing part-time jobs that is paid based on ad hoc basis. So if you are working outside and there's a CPF contribution, so on and so forth, definitely you'll be added in. Yeah, so down here, same thing. If you're talking about those people whose SRS account at 62, that's 40,000 and 400,000. then the amount that they withdraw will be based on the table below. So if you realize that I mean 50% will be taxable, so all in all, at the end of 10th year, they have to pay a income tax of 2750. So comparing scenario A and B, even though both scenario had a total of 400,000 withdrawal for the SRS account over a 10-year period, scenario A allows SRS member to avoid paying any income tax. This is why you should also plan your withdrawal very, very carefully. Yeah, so I mean, contributing to reduce our tax, I mean, it's considered as a tax deferment. It's not really a tax evasion. So this have to be done in proper manner. Okay. So the biggest caveat against SRS account is that withdrawal made before the statutory retirement age will be subject to a 5% penalty. So in addition, 100% of the amount this time round withdrawal will be taxable. So for example, let's say you withdraw 10,000 for SRS account before the age of 62, you incur a penalty of let's say $500, which is 5%. So the full amount will be also added to a taxable income for that year. Yeah, so it's not cast in stone where you cannot take out the money. You still can take out the money, just that if you take out, you got to suffer a 5% penalty and the rest are taxable. But this kind of thing, I mean, who knows, right? If it's in the event of emergency, definitely you have to take out the money. Okay, so the pros and cons. So in my opinion, you should only contribute funds to SRS account if you are fairly confident that you won't need money in the future. Otherwise, the 5% penalty on early withdrawal may cancel out any tax savings you enjoy in the first place. So this is also something that I think if you are in your 20s or if you are 30s, and you definitely need more funds to save up for your wedding or even for your brand new BTO or even your planning for your kids. These are the money or funds that you need to prepare aside. So if you pump in the money to SRS account, the money will be locked out there. And if you suffer 5% penalty, which is something that uncalled for lah. So I guess if you want to contribute, please think twice and do calculate how much that you actually need to set aside as an emergency fund. Okay, so the last pointer down here, however, if let's say withdrawal is made under exceptional circumstances such as death, medical grounds, bankruptcy, or by a foreigner who has to maintain his SRS for at least 10 years from the date of his first contribution, then the 5% for early withdrawal will not apply. Yeah, so these are based on exceptional cases. So the analysis. So by now, the value proposition for SRS should be fairly clear. If you are a mid to high income earner with a tax income of 60,000 or above, you can consider contribute to SRS account and to save some money on your tax. You can, right? For example, let's say you earn 60,000, you can save about 1070 in his income tax when contributed 50,003. This savings is immediate. In the unlikely scenario that he or she needs to withdraw money, his 5% or penalty of 765 will still be lower than the tax savings in the first place. While this is not an ideal solution or scenario, it also illustrates how the SRS can be effective tax saving mechanism for mid to high income earner. So this is something that you really have to plan. 60,000 if you're married and let's say there's two of you, one of you contributing should be fine. Just that as I mentioned earlier, please make sure that you don't need the money at any instance for the next many years to come. Yeah. So these are all the things I want to share for SRS. I guess this is something that's all along been in Singapore. It's not new. But there are some people that probably they procrastinate or they do not want to contribute or been thinking it for the longest time. Yeah. So lastly, if this video helped you understand SRS better, hit that like button. Share it with someone who still haven't opened their SRS account and subscribe. I post really finance and lifestyle content to help you level up your wealth in real life. And thank you so much for watching my video and hope to see you in the next video. Bye.